join us, folks. Please join us for the pledge.
Allegiance to the flag of the United States of America, to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all.
All right. Roll call, Casey, please.
Tom Roach,
Here.
Ella Collins,
Not
James Donahue,
here.
Amanda Durkee,
I will not
she's
be
not gonna be here. Christina Durkee.
Here.
John Guglielmo.
Here.
Tim Clark,
Here.
Taylor Butler. Here.
Awesome. You know of any public comments?
No.
Okay. Let's get straight to it. Do we have a presentation prior to motions, or? All good? Okay. All right, folks.
Well, actually, I'm sorry. Alan will be presenting
Probably, yeah.
if that's what you're going to do before you have the action.
Yeah, I guess we'll do that before the action, yeah. So we have Alan from
Bonadio.
Bonadio, thank you. He's gonna do a little presentation on the audit for us, correct?
Yes.
Okay.
Should I sit,
Whatever makes you
stand?
comfortable, sir.
It'll be easier if I can sit.
Sit down.
That's fine.
All right. Can I take the, do I need the mic?
That's perfect where it's at, whatever fits for you.
Okay. Just to introduce myself to everybody, my name's Alan Walther. I'm a partner with the Bonadio Group. We are the school district's external auditors. We have completed the audit of the financial statements for the school district, which we provided to superintendent electronically. I hope everybody got a copy of those. I also prepared, which the superintendent passed out as well, a PowerPoint presentation that just summarizes. It's just easier to do it this way than flip through a zillion pages of the audit report. But if you did, I brought my copies of the audit. So if you guys had questions on specific things, I'm happy to answer them if I can.
I do, and I hope you probably answer me go through.
Okay, so, yeah, so fire them off. If I can't answer them, then Greg hopefully can, or we can get you the answers. Anyway, let's jump right in. So the very first slide, just a summary for the results of the audit. We issued unmodified opinions on the school district's financial statements. Unmodified opinion is the highest level of assurance we can give on your financial statements. That is the opinion that all of the users of the financial statement, the State Education Department, OSC, bond rating agencies, that's the opinion that they will be looking for, okay? We did have one material weakness with regard to the school district's financial reporting, which we'll talk about. There was one instance of noncompliance, which we'll talk about as well, that was reported. We'd like to thank the business office and all the school district personnel for their assistance in the audit. An audit is a collaborative effort. We can't audit what you guys don't provide, so thank you for working with us to get the audit completed. The next page is required communications. Again, this is one of the reports that we issued, required communications letter. It's just, as the report is titled, required communications anytime that we do an audit. So the important information here, one new accounting policy was implemented during 2022, which was GASB 87, which pertains to leases. GASB is the Governmental Accounting Standards Board, and they set the accounting standards for which all governments need to follow. So all of our school district clients adopted GASB 87. You guys were no exception. No transactions for which there was a lack of authoritative guidance. All significant transactions have been recognized in the proper period. The next section, with regard to sensitive accounting estimates, you think of financial statements as numbers. You think of numbers as exact. That's not entirely true. There are some significant estimates that are within the financial statements. The estimates that we've listed predominantly affect your government-wide financial statements. We'll talk about the two sets of financial statements that the school district presents, but the significant estimates are depreciation, which is based on useful lives of your buildings and equipment. Other post-employment benefits, which is a very large estimate that you see on your statement of net position. That is an actuarially calculated estimate of the school district's obligation to its employees and its retirees for post-employment benefits, which is primarily health insurance. compensated absences based on accumulated leave time and pay rates. And finally, the net pension asset and liability and deferred inflows and outflows that flows through from the school district's participation in the two New York State plans, the ERS plan and the TRS plan. So our role with regard to those estimates is to evaluate them and consider if they are reasonable in relation to the financial statements, and we did that, and we believe that they are. Page 2. Our audit was delayed. The audit is due October 15th. It is February 6th, so the audit is late. The audit was delayed due to obtaining schedules to get the audit done, primarily regarding the special aid fund. There were multiple versions of trial balances prepared for us. There were one-sided entries that were posted, which then made the trial balances out of balance, et cetera, et cetera, et cetera. We worked through everything. Everything is complete. Everything is in order. Chris is here. Hopefully you guys are on the right path to get on the October 15th deadline in the future. Management recorded all the adjusting entries that we had, so your books match our books, and there were no disagreements with management. Disagreements with management would be with regard to application of accounting principles or access to records or anything like that. Okay. The next section is financial statement highlights. So if you read the financial statement document, and I get it, it's close to 70 pages long, so you may not have read it.
Riveting
but,
reading, though.
but it's riveting. But if you did, when you look at it, there's two sets of financial statements. Okay, there's the government-wide financial statements and then the fund-level financial statements. And those two sets of financial statements are required by the GASB, by the Governmental Accounting Standards Board, but they show two entirely different pictures of the school district's finances. And what the differences are, the government-wide financial statements are, in a nutshell, all of the school district's funds added together, plus your long-term assets minus your long-term debt, and using the full accrual method of accounting, which means that you recognize assets regardless of when you either turn them into cash or you consume them via depreciation, and you recognize liabilities regardless of when you pay them out in cash, okay? Whereas if your fund level financial statements, you use the modified accrual method of accounting, which is the method of accounting you use for your budget, where you take a 1 year at most look at your finances, okay? So it's two, they're both correct because it is what you need to report, but it shows two different, two entirely different pictures of the school district's financial position. So the next page is just a summarization of your statement of net position. This is your first government-wide financial statements. And your statement of net position shows that the school district has a net deficit of $5.4 million, okay? Which basically means, in a nutshell, your liabilities exceed your assets, okay? And the reason for that primarily is because you have to recognize all of your other post-employment benefits obligation, which is approximately $20 million, okay? Every single school district that we audit is in the same position as you guys. And we have some, with school districts with budgets that approach $1 billion, and they have 9-figure deficits. So the size of your net deficit in proportion to your budget, totally in line. And it's just the way that GASB says you have to record those other post-employment benefits. You're recognizing a $20 million liability that goes out forever, right, until the last person who's either employed or retired is deceased. And there's also, New York State does not allow you to set aside any money to offset that, okay? So my point being, nothing really to be concerned about there. Some of the highlights here. Again, your current assets, $5.4 million. Current assets are cash receivables, primarily capital assets, which is the net value of your buildings and equipment, $13 million. There's a pension asset that passed through from the state pension plans of 3.6 million. Deferred outflows that passed through from your participation in the pension plans and OPEB, 4.6 million. Current liabilities, which are accounts payable and accrued liabilities primarily, 1.6 million. Your long-term liabilities are 26 million, of which OPEB is approximately 20 million, and deferred inflows of 4.5 million. Okay. The next slide, your statement of activities, which is the reciprocal of your statement of position, showed a net position increase of $981,000 for 2022, and that's at the full accrual, using the full accrual method of accounting, and that takes into account long-term pension, other post-employment benefits, and depreciation differences, which are the primary differences between the government-wide and the fund level financial statements. The next slide summarizes the school district's balance sheet. The balance sheet is at the fund level, so this is probably a little more relevant for the day-to-day operations of the school district. And your total fund balance here is $4.6 million. Okay, so you have a positive, right, total fund balance of $4.6 million, of which the general fund balance was $4.3 million, and of that $4.3 million, $1.9 million was restricted for various purposes. $402,000 was appropriated for 2023. That was the amount that was used to balance your 2023 budget. And then $1.9 million was unassigned. The $1.9 million unassigned amount is the amount that's subject to the New York State 4% limitation. That totaled to be almost 17%. That was your compliance finding. Okay, so the compliance finding you had was that you had fund balance in excess of the New York State limitations. 17% is pretty high, but we had a lot of school districts, particularly this year, that had 4% limitation findings. You know, if you think about it, all the state aid, all the federal aid came in. School districts had a hard time pretty much across the board filling positions. So, right, so you had favorable budgetary variances, revenues are favorable, budgets are favorable, it flows through the bottom line, end up with these findings. You'll get a letter from the state asking for a corrective action plan. You just, tell them that you'll address it in the future, and that's it.
Right, with the understanding every school almost every year is over that 4%. We used to get the letter every year, and yes, we'll do this, we'll do that, so it's nothing to panic about, because we're gonna need that money.
Yes, exactly, exactly. So, and then your non-major fund balance is $254,000. The next slide is again, summarization of your revenue, expenditures, and changes in fund balance. Your combined total fund revenue was $12.8 million. Expenditures were $11.4 million. Other sources were $31,000, resulting in a net increase in fund balance of $1.4 million. The general fund revenue was $11.4 million, and your fund balance increased $1.3 million. Your special aid fund spent $852,000. Special aid fund is the fund through which your federal programs run. The next slide is some of the results versus the budget. We don't audit the budgeted statement, but it's required to be presented as required supplemental information. The highlights here, your revenue total budgeted was $11.1 million. Your actual revenue was $11.4 million. So you had a $269,000 favorable variance there. Your budgeted expenditures were $11.2 million. Your actual expenditures were $10.1 million. You had a favorable budgetary variance there of $1 million. Your other uses, you had budgeted to use 42,000. You actually gained 79,000, so you had a favorable variance there of 122,000. You had encumbrances, which are budgetary carryovers to 2023, of 54,000, and a net overall favorable budgetary variance of 1.4 million, again, which flows through to the fund balance, resulting in that fund balance finding. The next slides pertain to your governmental audit standards reports. And we issue, so that, because you're a government, we need to issue a report on internal controls and compliance. We had one internal control finding material weakness with regard to year-end closing procedures, which basically just relates to, as I discussed previously, the reason why the audit was late, audit readiness. You know, reconciling all the accounts, making sure your interfund transfers balance, your due to funds balance, that all the funds are in balance, ready to be audited. It was a bit of a struggle this year. You know, again, I think you guys are making the right moves to be in good shape for next year. But just because of the, you know, the amount of effort and difficulty in getting things, we did need to have that finding. We had the one compliance finding, which we spoke about, the fund balance, the unreserved fund balance, and I had jotted it down here. It was 16.68%. And there's a schedule on page 59 of the financial statements. They make you walk right through it, so you can't hide. So it's a required schedule. State Education Department requires that schedule there, so it's there. We did issue a management letter as well. Your management letter is optional. We don't have to issue a management letter, but if we see things that we think, you know, could be improved upon, that we think are, you know, important enough to bring to the board's attention, we do write one. So we had a couple of comments regarding the extra classroom activity funds, primarily regarding documentation, cash receipts, cash disbursements, of having, there's a few cash disbursements that weren't signed off on. There were a few cash receipts that didn't have any real support as to exactly what it was. There were a few instances where receipts or disbursements, excuse me, were not posted to the club level ledger. So anyways, the extra classroom activities could use some tightening up, very common. I just, you know, again, to put that into context, across the board with school districts, very common, right? You have, you know, faculty advisors and student
We've
treasurers.
addressed the same issue. I think, Bruce, you were here, we talked about getting a handbook together, because sometimes from club to club, organization, they don't know. They don't know what the accounting procedures are. So someone will take money in from a basketball game and just turn it over wherever. So we're on that, we're trying to tighten that up.
2 years in a row, by the way. that
I know,
we decided on
I
audit
know.
reports
We
2
knew
years
that
ago.
before, but that's, we need to get a handbook out when these people take over, so we know. And that's, you know, we're aware of that.
So,
We're working on it.
no need to recreate the wheel. There's pamphlet 2 that the state education department puts out, so I'll email that to you tomorrow and just give it to them, and it tells them exactly what to do. So you don't have to do it, and you guys, you know, I don't know if you can adopt that exactly as board policy or whatever, but that's, you know, it says exactly what needs to, you know, what the procedures are, what the officers are. It gives everything you need to run an extra classroom.
And I know in the beginning of the year, Chuck and Michelle, they addressed the faculty, so we were able to speak with our in-house advisors on the exact procedures to go through, so we'll have to refresh that too. That pamphlet would be nice, thank you.
Okay.
The handbook. That we should have.
And then there were a few clubs that were inactive, no activity in the clubs. So, you know, we had, you know, you should just consider whether those clubs should be disbanded, you know, or what you're gonna do with those. Prior year balances carried forward. What we were getting at that, in that comment was there were some accounts receivable, accounts payable, some accruals that were left over from the previous year that were not reconciled. Again, you should be, paying attention to that. I think if you, tighten up the year-end procedures, I think that goes away. And then the last comment was journal entries. There was no formal sign-off or review of the journal entries. That's the extent of my commentary, unless there's any questions.
Yeah, James, what do you got?
No, actually, he got a couple of them, but most of them are not gonna be directed to him. It's something that we need to do as a result of this. So that was good. I'm looking at
I just got two quick questions. So this closes the books on fiscal year, the previous fiscal year, right?
2022.
These numbers are accurate as of June 30th, 2022.
June 30th, 22.
Okay, great, all right. So obviously some time has transpired, but these numbers reflect the end of June 30th, 2022. Gotcha.
June 30th, 22. Yep.
Yeah, I know because of the delay, I don't know if anything was taken into consideration, whether our delay in payment, state aid payments were reflected in this, but that has nothing to do with this report because it ended June 30th, 2022.
Correct.
Perfect, thank you.
Alan mentioned some of the things that we had gone over. Part of what we have to upload into the portal will be our corrective action plan. Fortunately, Chris and his people in the business office have already done that. So Chris, I don't know if you want to address these two that are in the board packet just very quickly, because they will be, our goal is to either go in tonight and start uploading things or be doing it tomorrow morning, so.
So if we wanted to start with the financial statements, section 2, or those findings, the year-end closing procedure, we took their recommendation, and obviously as a team, we decided to break down the exact accounting principles that we could actually implement, and we will be implementing it immediately, and we're hoping to complete the process by next year, 6/30/24. We also took their recommendation on stewardship and compliance, and that was, again, mostly basically due on the fund balance side, and we broke down exactly where we were deficient, but also where our board and us can communicate, where we can use our funds in a better way, so we can actually get down to fund balance. And we're also implementing that immediately, so we're hoping by June 30th of 23, we actually will have a really good handle on the fund balance. The budget season in front of us.
Excellent response on that one.
Just one more question I got. So after we accept the audit tonight, if that's what takes place here this evening, what other things have to tick off so we can start getting aid flowing again?
That is in the hands of New York State. So
Oh, so
according to
it's-
Greg,
Okay.
they have to do their internal controls and go through this audit to make sure everything's great, go through our books. That's approximately a 4 to 6 week window from what Greg has told me. So we're probably looking at state aid flowing, we're hoping March.
All right, good. So it's out of our hands. We've done everything we have to do, aside from tonight's vote. We're all good.
And then, as you guys said, upload, right, you gotta get it to the state.
Gotta
and
get it
then
to
it's
the
out.
board.
Once they have it, it's in their hands. And, yeah.
The corrective actions are important because this actually is also holding up some school districts. So by being proactive and knowing what we actually got from the auditors, where we need to change, we have created a plan to make those changes.
Very good.
And just to close the loop, I have had conversations with Chris, and I've planted the seeds with Alan. We are looking hopefully at getting dates for our pre-audit for this year. So Alan's gonna be a familiar face, and his group will probably be here in a couple months to do a pre-audit of this year's finances, so we meet the October 15th deadline this year and not be in the same situation again. So according to Greg, his plan is, I don't know if he's relayed that to you, Alan, I don't want you to be taken by surprise, but his plan is to have you here, I guess, in early May, or start talking about that to do a pre-audit. And then the normal cycle is you come here in late or early or late August, and then basically close the books at that point so we can meet some deadlines. Be good to go in September.
The typical audit timeline, audit planning procedures, which is where we would test procedures, test controls, maybe do some single audit testing. We typically do with our clients in March, April, May, to get a jump on it before the year end. Then you guys close the books, right? We can't audit the June 30th numbers until July 1st, right, theoretically. That would be a little early. And we do the year-end audit, exactly that, late August, September, get everything done for October 15th. So I think, again, I think you guys are on the right track.
Any other questions for Alan, folks? Thank you, appreciate it.
Okay, thank you.
Thank you so much.
Thank you.
Sure thing.
All right, if we're all ready, I'm gonna go to action items. Now, a motion to approve the independent audit reports for the fiscal year ending June 30th, 2022, as presented by the Bonadeo Group.
I'll make that motion.
John, Ella, any discussion? All in favor?
Aye.
Aye. Motion to approve the independent audit 2022 corrective action plan. Need a motion. John, Christina, any discussion? All in favor?
Aye.
And a motion to approve the independent audit 2022 ECAF corrective action plan. John again. Tim? Any discussion? All in favor?
Aye.
All right. That puts that to bed. Need a motion to approve the contract with Trojan for the boiler project. Christina and Ella, any discussion? All good? All in favor?
Aye.
All right, let's get those boilers working. All right, motion to approve the contract with Tetra Tech for the boiler contract. Ella? Taylor? Any discussion? All in favor? Motion to approve the contract with Stark Tech TBS for the boiler project. Christina? Tim? Any discussion? All in favor? Motion to approve the contract with Alpine for the boiler project. A lot of folks working on boilers.
Motion.
Taylor? Tim? All in favor? And motion to approve the contract for the NYS ERDA study, NYSERDA study. John? Ella, any discussion?
Was this discussed before this project came up?
This was, I want to say Garrett brought it up to us a few months ago. It's energy efficiency study, it's free.
Okay.
They do it for free and,
If it don't cost, we take it.
yeah.
Yeah,
Yeah.
the language in the contract just, will be on the funding, doesn't go through, but it seems like. I've never heard of anybody paying for a NYSERDA study on their own.
Correct.
No, they're not, that's a no charge thing, so.
All right, cool.
They do it all the time for a lot of people.
All in favor?
Aye.
Do we need a check?
No, we don't?
Then I need a motion to adjourn, folks. Taylor, John, all in favor?
Aye.
Thank you, thank you, thank you.
All right.
Wow.